Hello, everybody. I'm just posting this in one or two spots, and then I will be right there. PM session. Market cap, market wrap. Okay, 3/1/2021. Okay, everybody, thank you for taking the time to join this this quick podcast or broadcast. And basically, today was a strong day. Last week was a little tough on equities, but today the index has finished up, about 2 to 3%. A lot of that stems from the bill that was passed in the House of Representatives, and so that was on Saturday. Now, I did a broadcast earlier this morning, kind of outlining some of the issues that I find to be with that bill. It's like a Trojan donkey of sorts, Trojan communist of sorts of trying to figure out how to get, basically $150 to $200 billion into the next generation of Americans. Some of which, at least probably, conservatively, it's probably at least 20% of that number of the children, and upwards of 40% of the children that would be getting this aid, or $50 to $100 billion, would be illegals. And, that's unfortunate that people that are actually paying, sorry about this, I'm just trying to adjust this lighting. One of these days I'm going to get this right. That taxpayers and people that are working and struggling in this economy because of the virus that took place are being asked to take on debt to pay for people that are here illegally. And so this is part of the economic news, whether or not people want to face it or not. Now, the market rallied in a big way today because the dollar price of this is almost $2 trillion. So $2 trillion, of which, when you add up all the money that would go to individual taxpayers as well as children, is only about 32% of the money. And the rest, 68% of almost $2 trillion, $1.3 trillion, is going to be going elsewhere. And so, with debt comes, more business being done. If you think about the economy, you go to the store, you go to the grocery store, you go purchase cars. When credit is easy and available for everybody to go buy things, it does create a jump in demand, but that demand can be fleeting when the money runs out. So what we've been doing for basically almost 2 decades straight is we've been funding this unhealthy version of an economy. If you don't believe me, all you should do is go pull down the economic report to the president. You can go to the website and see these reports going back 20, 30 years. And the debt of the United States 20 years ago, before China entered the World Trade Organization, was a substantially lower level than it is today. And debt, the amount of debt in the U.S. system, across all levels, I'm talking about government debt, mortgage debt, credit card debt, all type of debt, housing debt, in the past 20 years has outpaced not just economic growth, but population growth by the tune of over 13 trillion. That's correct, with a T. So, as everybody knows, there's a million, millions, and a trillion. So $13 trillion. That's how much the debt has outpaced what we have produced. And so when I think about that number, and then I hear 2 trillion, another 1.9 trillion, and then there was like 3.3 trillion last year. Those numbers I'm giving you at 13 trillion, that was before last year and this year. So that number is almost closing in on $20 trillion. So if you think about it, and I was hopeful that President Trump in the second term would just literally declare a debt jubilee or do a write down of the debt. I thought that, I thought he would have the stomach to do that to some degree, and a restructure. And there's ways that the debt can be restructured in a healthy manner that could make sure that, people that have their money in the markets, the average investor, pensions, all these different funds, there's a way to restructure the debt that they don't get wiped out. and there's a way, not totally wiped out. They could take a bit of a haircut, but when that adjustment occurred, we can right size what interest rates should be, because interest rates being artificially low is creating tremendous amounts of distortions. And it's not just this year and last year. These distortions have been occurring for at least a couple decades as well. And that gets me to part of the spending bill that was passed in the House on Saturday, had a minimum wage component. Now, I did a video on minimum wage, or maybe I wrote a piece about it. And if you look at minimum wage in this country back to 1970, it was about $1.60 an hour. Now, if you think about productivity in the past 50 years, productivity in the United States has more than tripled. So the amount of money that the average person in minimum wage should have earned, if they just stayed in line with the productivity gain of a minimum wage worker, would it be 1.6 times 3, which is $4.80 an hour. But keep in mind, that doesn't take into account inflation. Now, everybody knows that inflation has been a lot higher than zero since 1970. And when you take inflation into account, that 480 turns into like $34 an hour. Now, that's not realistic. That minimum wage could be $34 an hour. So you should ask yourself, well, what happened, Bobby, if productivity gains basically suggest minimum wage should be at a minimum of $5 an hour, but minimum wage is only $7.25 an hour federally. That's what's mandated. Now, keep in mind, different states have different rules. I'm not speaking to every state, just talking about the federal minimum. Well, what ate all those gains up were taxes. So when you keep raising the tax burden on a society and you keep adding all this debt, which I just told you what the number has been since 2000, that the debt in the overall United States has outpaced economic growth by the tune of probably 15 to 20 trillion conservatively. That's like a conservative estimate. Like, I'm not making this up, folks. Please, if you want to look at anything I'm talking about, go to the reports that are published online by our government. Economic report of the president is about 500 pages. I'm not joking when I say I've probably read every single one in the past 20 years. Yeah, I enjoy reading that stuff. And this is why I have all these random facts and figures in my head, because I enjoy reading the stuff that some people just kind of use as a paperweight on their desk. And but these figures are there for anybody who wants to read them, and think about them. More importantly, you shouldn't read numbers passively. You should read and ponder what that means. Ponder how it impacts your life. And so part of these broadcasts is the market updates is to say, look, stock market's up 2 to 3%. Okay, rates are 1.4. They've doubled, basically almost doubled off of their lows in November. Obviously, money is still pumping into the economy, even though things haven't turned back on just yet. So people are really excited that all of a sudden, if the economy opens up more, that this is going to lead to a lot more business growth. Now you have the Federal Reserve basically saying, and continues to repeat this policy of inflating away some of this debt with a 2% inflation target, which once again is a way of stealing your wealth. They're not telling you that piece of it, but when you create inflation for the sake of creating inflation, you're stealing the overall wealth. You're debasing the wealth of the nation. So if you consciously grow inflation by 2%, and then you have $100 trillion of assets in the economy, it's a fallacy to think that, that they're going to be worth $102 trillion because of the inflation. That's true. They might go up by that 2%, but at the same time, you need to be paid for that risk and it possibly taking off. So those assets are actually losing value from a discount rate perspective. All things equal, a 2% inflation rate just over one period, you should pay 98 trillion. So that's $2 trillion they're taking away from everybody. And that's just the United States. Now you got to remember, when the Fed sets the inflation policy for planet Earth, if 60% of the money in the U.S. in the world is U.S. dollars, then this is what they're doing. Now, I've talked about crypto, from an information perspective, and I have no opinion going long or short cryptocurrencies. All I said is it's a phenomenal technology. You should look at the technology and be careful with what you do, thinking of it as something you can make money on in either direction. And and I've had some very humorous comments that I have read some of them. I don't even bother responding. But when people say, stay in your lane, Bobby, you don't know about cryptos, I can't help but laugh, because I've probably read more and understand more about how currencies work in this country than a handful of other human beings. So anyways, I find it humorous, because somebody who a lot of times, sometimes, oftentimes people will equate something going up with their intelligence, and something going up, as the old saying goes, a fool and their money are soon departed. And I'm looking forward to witnessing some gap risk in the future with different types of asset classes. I'm not talking about crypto, just in general, because I think that's what really is going to wake some people up to some of the risks that they've been taking, that they think are investments. And so you got to be super careful about this. By the way, as all the investors out there, don't take anything I'm saying as advice for yourself. Talk to a professional. When individuals out there try to tell you what you should buy or what you should sell, and they are not a professional, keep in mind that those individuals are not subject to the rules and regulations of people in this business. And you should view anybody who's talking about what you should buy and what you should sell as somebody who says they're a doctor but has never gone to medical school, or as a lawyer who's never taken a law class. They just read something about contracts. You should view any advice about stocks anywhere in a similar light, because these are extremely complicated securities. They're not just securities, but the underlying businesses. You should take the time to make sure you identify and find someone who understands what the heck they're really talking about. And if you don't, you really are almost like going to a voodoo doctor or something. You might as well just hope for the best. And if you get sick, and just pray, only pray with no visiting a doctor is what I would equate it to. I think both are a great idea. You should pray and visit a doctor, but if you just want to just do the praying, I think you might have the outcome. You might have an outcome that you're pretty disappointed in. And so I just want to make that point clear. With regards to small caps, I think they had a stronger day. They were up almost 3 1/3%. Some of the metals sold off, which is pretty interesting. Gold and silver were up on the day and then sold off. And the reason why I'm saying that's interesting is because that would suggest that their inflationary pressures are not there yet. So it's a confusing metric, and sometimes these things don't move in lockstep. But if the economy is doing exceptionally well, and you don't need to continue to pump money into the money supply to keep it afloat, then inflation can sometimes trickle, go really well with the economic growth. So the money supply growth is similar to the economic growth to keep price stability. But if you have a situation where the economy is still weak and they continue to pump money into the system, and asset prices are still heightened or steady, you have to have tremendous confidence that when money starts turning over and it's starts being spent, that the Federal Reserve is going to be able to pull that money out fast enough. Because if they can't, you're going to have inflation. Now, what I would tell you is, I don't think they're doing a great job right now, and you could simply look at oil prices. Oil prices up over, basically over 20%, 20-something percent since November. That's not just inflationary. That's also a sign of a change in public policy, which we all know. we had the America First policy, and we had all the energy production on U.S. soil. And then right after the election, this oil is, we're basically starting to buy oil from other countries again and not putting America first with our energy policy. And so it's unfortunate, but there's we're in this really fuzzy area with regards to how this is all going to play out. So I guess that's pretty much it. I think that if you are not sure how you should be positioned, and you have a lot of money in the markets and you did really well in the past few years owning stocks, you should really ask yourself, how much can you afford to lose if things went down 20 or 30%, like they did last March? And now is a great time to have that conversation with yourself and with your spouse if you're married, and say, look, we lost this much money last February and March. Now keep in mind, it was a lot worse intra-month. A lot of people didn't see that because they didn't check their statement till the end of the month. And when things get really crazy, a lot of people just turn their computer off and don't want to look. And what I would say is, if you take a look at how much you fell during the worst month of last year, and ask yourself, if you fell by that much now, would you be okay with it? So if you fell 30% last year on $100,000 and you didn't like that feeling at all, and you were worried that you could fall another 20% or something, then you should say, okay, well, what is the number? If the number is 20%, then cut a third of your exposure. If the number is half, then cut half of your exposure. Does that make sense? I mean, I know I'm just talking to myself here, but now is an absolutely wonderful time to do that, because we're at all-time highs, basically. Not on every index and not on every stock, but we've had an incredible run. And oftentimes, when they tap you on the shoulder in the hedge fund world to de-risk, they tap you on the shoulder at the bottom. when things are really going really bad, that's when they ask you to cut your risk. Very rarely do people want to get tapped on the shoulder when things are going great. They want the party to keep going. And what I'm trying to say is, my little bit of advice, I'm not telling you what to do. I'm just asking that if you want any sort of advice, you can always check out our website and so forth at Preactive Investments, is think about what is that number that you're comfortable drawing down if things go down. And you should have those conversations now when things are great, not when things are horrible. When things are horrible, you get a little overexcited and you sell it. You cut exposure, more exposure than you might have wanted to. Nobody has a crystal ball. It might be the right decision. I'm not telling you what the right decision is for you. All I'm saying is, you want to try to turn these emotions on their head. When things are really getting super cheap, it's like the price of beef goes from $3, $4 a pound down to $2. If you like beef and you could freeze it, you might be like, that's a great price, I'm going to buy more. You should feel that way about assets that you like. Now, on the flip side, if the price of beef is $9 and you're like, you know what, I don't need to eat beef that much. I'm going to go to chicken at $4 a pound. That's a normal, rational response. And what I'm saying is, there's so many things across various sectors of our stock market that it's a wonderful time to take some chips off the table, or at least consider it. We might still go higher after you do it, and you can't have that regret, because as Buffett would say, nobody rings a bell at the top. I've never heard of a bell going off. Now's it. Everybody get out at this top price, because there's always somebody who's buying at that top price. And people buying at that top price get a little excited and they like the action. And you have to ask yourself, who are you? Are you the person that gets excited and wants to chase and buy the action? Or are you a person that wants to, you know what, makes sense. I don't need to be up here anymore at these levels. I want to take some money down. I want to, have my rainy day fund, or do you want to be like, you know what, I'm not going to do anything and I'm just going to, let everything just be, and then kick yourself in the pants if things don't turn out the way they might possibly go. So with that, I hope you guys have a wonderful evening. I'm gonna do some other clips tonight. I got my 8:30 clip for, I believe it's day 9, the greatest book in the history of the world, the Bible. I just kind of going through lessons and kind of posted some of the clips if you want to check it out. And I may do one other clip. I got to see if I'm going to do it. I'll just stay tuned. I might post it later. But I've been asked to do it, so because I'm going to go down this path, and I figure why not? Might as well throw one more clip into the mix of what I'm up to. Thank you guys so much, and hope you have a blessed evening. Thanks.